Good morning. If you go to see, just yesterday, the indices were racing ahead, kicking away any concerns which came their way. But today is a slightly different day. After touching 30-month highs, the Indian indices could see some pressure given the global cues this morning. On the domestic front, food inflation has come down to stand at 10.35% during the week ended 7th August as against 11.4% reported in the previous week. A couple of economic reports released in the US brought the bears back with some gusto. The Dow fell 144 points, the S&P dropped 19 points and the Nasdaq lost 37 points. Disappointing reports on weekly jobless claims, slowdown in the manufacturing numbers in Philadelphia region, and the lesser than expected increase in the index of leading economic indicators spooked the street. The weakness spread over to the Asian markets with the MSCI Asia Pacific falling after gaining for 5 days in a row. The Nikkei 225 is down over 1% and Kospi has shed almost 0.5%. FIIs were net buyers to the tune of Rs 8.21 billion worth of equities, while DIIs purchased 2.15 billion rupees. While domestic funds have been net offloaders in the recent past, foreign funds have pumped in close to $12 billion into Indian equities this year. The Cabinet Committee on Economic Affairs, which was to meet on Thursday, will now meet today at 10 a.m. Food inflation stood at 10.35% on a year-on-year basis during the week ended 7th August, lower than the 11.4% annual rise reported in the previous week. Policy bottlenecks may further delay GST rollout. The government was looking into the proposal of allowing foreign airlines invest in domestic carriers. Banks may have to reveal use of funds raised via CPs. The government may come out with more representative data on industrial production by this year end by adding nearly 150 new items and deleting the obsolete ones from the index. The Reserve Bank of India has strongly advocated the use of public-private partnership to fund infrastructure projects in the country. Asian Development Bank likely to revise upwards its growth and inflation projections of India for financial year 2011. Moving on to the recommendations, a buy on Prism Cement. We advise buying the stock above levels of Rs 56.50 with a stop loss to be maintained at Rs 54.50 for a target price of Rs 60.50, and a buy on JBF Industries. We expect the stock to remain in a momentum as long as it sustains above its last week low of Rs 145. We recommend traders to buy the stock above levels of Rs 151 for a stop loss to be maintained at Rs 146 for a target price of Rs 161. The derivative strategies are short India Bulls Real Estate August future in the range of Rs 192 to Rs 193 for a target price of Rs 199 and a stop loss is to be placed at Rs 177. And long Aurobindo Pharma August future in the range of Rs 1073 to Rs 1075 for a target price of Rs 1100 and a stop loss is to be placed at Rs 1062. Thank you and have a great day ahead.